Morning, y'all. Doing another video today. I'm gonna do random trader lessons as content. These are gonna be lessons that I wish I learned along the way, like really early. I learned them. I'm still learning them. They're concepts. But today's is gonna be, you can't go broke taking a profit. So that's a trader saying. It's a stockbroker saying. It's an investor saying. You can't go broke taking a profit. So if you invested in something and you made money, and I'm not talking about like 1% or a small percentage, if you make a good chunk of money and you're happy with it and you're not sure what to do, you can't go broke if you take the profit. Now, one thing I have learned the hard way is that if you wait too long, the position, your investment can go bad. Excuse me for the ding. If you're if you sit on the profit, you could lose it. And silver has been a good example. Crude oil is always doing stuff like that. The Nasdaq right now has a huge profit, and Apple has a huge profit. Tesla, Microsoft, Amazon, all these names have a huge profit, and the market will still be there if you're not in it. As in, you can get in it again if you close out your position, and you can always get back in. There's a really neat strategy called stock replacement where you use a long-term option, and that's what I would do if I wanted to put on a nice position without all my risk. There's a lot of reasons why people won't do something like that or won't sell. I just don't like losing money. It's one thing I hate the most. And if I'm in a position and I have a win and maybe I'm still bullish, I would want to reduce the position. So you can cut it in half. If you have a big gain, let's say it's doubled. If it's doubled, cut it in half and you can never lose money ever doing that. If you have a position, you have a trade and it's doubled, cut it in half. Get all your money back and then you'll have cash to reinvest. Psychologically, it's hard to close a position that's working, but if you're not harvesting your profits, you won't have enough cash for a new entry or a new position. It's also a concept in asset allocation. If you have a portfolio and it's supposed to be 50-50 like stocks and bonds, and one position gets too big and it's now like 2/3 of the portfolio or you know 3/4 of the portfolio like stocks, under rebalancing rules you should reduce the winner and put it somewhere else. Maybe it's back into bonds, maybe it's just in cash, but you want to harvest the winner so that you have cash to put somewhere else. That way, because the market only goes two ways, if you buy your position and you're happy with your portfolio and it goes up, now it's too big. If markets go up and down, what's next? Probably down eventually. So you reduce it, and then you have cash, and then if the market goes down, you can put it back in and then let it grow again. So there's a constant ebb and flow on your positions. If you don't harvest your profits, the dividends won't be enough to reinvest if the market tanks. But if there's a 30% decline in the market and you're constantly shaving down your position, you'll have cash to reallocate. So, traders saying you can't go broke taking a profit. You can't go broke taking a profit. Don't forget. And I wish I learned that a long time ago. It would have helped me out. And I hope that helps you. Please subscribe and share comments if you like it. It helps. Thank you.